I think all of us keep waiting for the big move that keeps getting delayed. I think we've been sitting for a year just churning and churning and churning. So feels like we're getting about to that time of the process. I won't say cycle anymore. I'm not real convinced we're going to have cycles, so to speak, but I guess we'll find out.
Yeah, that's an interesting question that comes up a lot because it's like we have different 2025 than maybe 2021 was or 2017 was when we look at those 4 year things. And then maybe we also get a different 2026. Maybe it's just like delayed and all those different like theories. And I get that like now the question comes up more and more of like, oh, how do you look actually at like 2026 now as 2025 wasn't as it was different than people predicted to be.
Yeah, I think the best parallel I can come up with from what I've looked at, since we always compare ourselves to gold, and we're just digital gold, and you buy it for the same reasons, except digital gold is better than physical gold. I think the reality is it's going to be a lot of when the GLD, the gold exchange traded funds started. It's real fascinating to watch the flows of money that happened and the staggering amount of money that went into the ETFs once they were opened up finally. So I think in our world, I think it's going to be a lot less about cycles and a lot more about the expansion and evolution of money flows. I think that the desperation to get away from US dollars led a lot of governments and their central banks to dive into gold, and people like us are diving into Bitcoin. So I don't think you're going to get the state-based, government-oriented central banking behavior to change. And I think they love the concept of gold because that goes into their coffers and they centralize their ownership. And it just looks like the traditional financial system all over again. So, from that standpoint, I'm not terribly surprised to see gold take off. But it was a pretty breathtaking move. And, Bitcoin has really just been churning sideways at the 6 digit prices. And I think that here in the short term, the ratio between gold and Bitcoin is going to rectify itself. It's been fascinating to watch the replication of treasury companies, not just MicroStrategy here, in the United States becoming a dominant force in terms of its Bitcoin holdings. Clearly, no one's gone all in quite the way MicroStrategy did. And then you just get the copycats. And there's two forms of those, right? There's the form of them where there's one company per stock exchange per country around the world. And you start seeing a treasury company in France and a treasury company in Germany and a treasury company in England and so forth. And I think that they're just trying to look over at what Saylor did and what Strategy's doing. And they're just trying to say, hey, I'm going to be the lone option for that in our markets, domestically in our country. And they're executing those. The Bitcoin Opportunity Fund has invested a lot of money to create, a singular Bitcoin treasury company per country or exchange all over the world. And it'll be fascinating to see if there's just one of those, like a Meta Planet in Japan versus, all the derivatives of them around the world. They're all getting a lot of liquidity. They're all getting a lot of investment interest. And in those foreign markets, their exchanges or their countries may be yield starved so badly that they want to provide money out of the bond market in those countries into equities and get Bitcoin exposure, but they just can't legally do it within those funds. So I think strategy is going to dominate in the US. I think you're going to see one treasury company per country or exchange around the world that will remain viable. What I don't really know is all the other copycats and what really is going to happen to them. Buy Bitcoin. Like, why are you trying to get more cute? You don't have enough Bitcoin. Start with Bitcoin and just hold Bitcoin. And if you have brokerage accounts or 401ks or Roth or traditional IRAs in the United States or its equivalent internationally, a lot of people I still advise, okay, if you can't buy physical Bitcoin and cold storage it and self custody it, then the next best alternative is at least buy a Bitcoin ETF like IBIT. And at least you're getting exposure to the price of Bitcoin. And it's kind of weird to watch people who don't do either. You know, they're like, I'm going to go invest in a treasury company. And I'm like, why are you doing that? You know, I can't really come up with a good, compelling reason why somebody should be trusting the execution of a management team, the operations of someone trying to do something in parallel to Bitcoin. And even worse, a lot of these that are coming out of special purpose acquisition companies or SPACs that are already trading publicly, that have all sorts of equity overhang, warrant overhang, and they're basically taking this publicly traded SPAC, combining it with some other company, throwing some big name or influencers around it, and then saying, hey, we're going to be a Bitcoin treasury company, and this is a much better deal than just buying Bitcoin. So I don't really understand why people are doing that, to be candid.
Why do you say treasury companies scare you? Do you think they could lead to just a huge crash because there's no real value?
I always think their value is whatever the value of the Bitcoin they hold is. The reason I think for the average person worldwide should just stay the hell away from them is because they're probably not smart enough to do enough of the due diligence and the homework and really understand what they're getting. But what they're really getting is an operating company with risk, management, infrastructure, overhead, and personnel that is less efficient than just owning the Bitcoin. You get regulatory risk, SEC filing risk. You get risk to credit and traditional things that companies have to deal with across debt and equity and hybrid capitalization structures. Even worse, when you're doing treasury companies that are originated as a special purpose acquisition company like a SPAC, you're inheriting dilution. You're inheriting all sorts of ugly equity that someone else paid zero for to get the warrants on the SPAC. The people who put the money into a trust that were basically parking their money to get their 2% management fee, their 20% return, and then they may or may not leave the cash in the SPAC when it does the merger. Then you're also getting the regulatory risk when the merger is announced, that 6 to 9 month window, they're going to be able to get all the audits. The SEC is going to approve them. They're going to start trading. So I watch all these people like they're buying, you know, Mike Alfred made an investment. So what happened in ASST as a ticker symbol, right? It went from, he bought in the 85 to 95% range. He bought 1 million shares. So he invests like $1 million. It jumps 50% over the last 48 hours. But why does that matter? I mean, okay, so you have people controlling warrants who have a cost basis of zero. Anything above a penny, they can dump on those folks. People that already bought up here at these much higher prices are now seeing a surge, they can dump. So all that really matters is like, what's the MNAV? And why would you be paying a premium with all that operational and regulatory and filing risk when all you have to do is just buy Bitcoin or a Bitcoin ETF and you get none of that? I think the actual rate of inflation is the rate of return of the S&P 500 or the NASDAQ 100, because the S&P 500 and the NASDAQ 100 go up or down effectively almost 100% correlated with the M2 money supply. The more money they print, the more the assets go up in value, not because they're worth more, but the currency's worth less. So I use the rate of inflation. I don't listen to what the government announcement is. I think they're lying all over the world. Every country lies what the actual inflation rate is. But what they can't lie about is how much money they printed. And that gets reflected in often the price of physical assets like real estate and in the stock market. If you're working and you get anything less than at least a 14% raise per year, you're not even treading water. You're just losing money. You go from 50,000 to 57,000 and you think, hey, I got a 14% raise. I'm like, well, you're treading water. Nothing got better in your life whatsoever. Now, there's an exception when you're younger. I do this. All my kids who are 23 to 26, their W-2 payroll from their job doesn't go to their bank. It goes to Strike. and it instantly gets converted to Bitcoin. And then once a month, they use the bill pay feature of Strike to pay off. But as the price of Bitcoin's going up, they end up selling less and less Bitcoin. Every 2 weeks, their paycheck gets processed and they dollar cost average into more Bitcoin. And over time, their Bitcoin stack is getting bigger. The value of that stack is getting bigger. The amount of Bitcoin they're selling gets smaller. And my kids, since they started doing it when Bitcoin was probably $80,000, as we're close to like getting like 120, that's like a 50% reduction in their cost of living.
That's yeah, it's amazing because once you look at like the real inflation rate, celebrating a 5 or 10% salary seems ridiculous, and it seems even more ridiculous if you save in dollars and not in assets. It's like a double edge of like you want to save in Bitcoin, and you want to have an increase of your salary or like raise or like or grow your company or like whatever you do higher than the this 14%, and then you're actually doing double good in terms of that, and not double bad than what the average person is doing.
Thank you for watching this video. This was only a snippet of the podcast, and if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.